5 a.m. in New York City, 10 a.m. in London. Good morning, I'm Vonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Pressure mounting in the Middle East. Israel attacks Lebanon as the US readies new economic measures against Iran. The dollar slips as data further bolsters easing Fed rate hike bets. Stock futures climb on AI confidence. And the AI bond binge continues, with Alphabet eyeing billions for its first Australian offering. Let's get a check this Monday now on markets around the world. We'll start with Winnie Su in Hong Kong for the latest from Asia. Winnie.
Yeah, good morning, Vonnie. Well, we're seeing Asian stocks edging higher for a fourth day, the gains being led by technology shares. Well, we do have Korean market on holiday today, but Japanese stocks are actually seeing quite a bit of weakness today following those latest GDP numbers that showed an unexpected slowdown in the economic growth, specifically in capital investment and consumption. Now, the Japanese yen, though, strengthening a bit following that broad weakness in the US dollar. Now, flip forward, we take a look at the Chinese asset because the strength really is still in the tech stocks in Hong Kong. We did hear from Alibaba that they say their AI models have seen 3 billion times of downloads in the past 6 months, and that is topping the likes of Google and Meta. Now, we also saw cross-asset-wise the yuan extending those gains after the latest set of economic data still showing the weakness in the economy, whether it be the retail sales numbers, industrial output, or fixed investment, all missing estimates. So investors now betting that the government will have to step up with their stimulus support.
All right, Winnie, thank you so much. That's Winnie Su there in Hong Kong. I'm going to take a look at Europe. We'll start with the Stoxx Europe 600, which, as you can see, is higher. It's off its highs of the day, but plenty of groups are doing well. Defense companies, basic resources on higher metals prices, which we'll get to in a moment. Shipping companies after Maersk results. And, of course, tech companies, including ASML, all pulling that index higher. Now, you see, we do have the British pound a little stronger against the US dollar. That's primarily a dollar weakness story, but notable that we're trading above 135 for sterling. Copper, also a fascinating story. We're not quite at our peaks yet, but we are another 1% higher and very close to those peaks. And in fact, the spot price and the 3-month out price, that spread is the widest that it's been since 2021. This on massive inflows into the United States of copper, which is creating supply concerns elsewhere. And the reason that the US is importing all of this copper is thanks to tariffs and the potential for tariffs. We also have European gas prices higher as well. Storage is not as high as it should be at this time of year. Bloomberg Intelligence saying by the end of the winter, storage levels could actually be at about 20% of what they should be. And that's about 62 euros per megawatt hour at the moment, so very close to recent peaks. Let's take a look at the US because, again, we're starting Monday off with a nice rally in NASDAQ 100 futures. The NASDAQ seems determined to put July behind it, in fact. We're back almost to where we were in June. So we've really regained most of those losses from July. We were down 6.6%. In this month already, we're up more than 6% for the NASDAQ, and that looks to continue today. Not quite the rally in the S&P and Russell that we're seeing in the NASDAQ. Let's take a look at yields as well, because obviously that's the big story as we head towards Jackson Hole. We're trading a lot lower than we were at the height. We're at 415.63 and back down to 468.22, although just a couple of weeks ago, that would have been an elevated level. The 30-year yield is still of concern, though. We're well above 5.25 right now. That spread is definitely widening, and it's just fascinating with more auctions this week to see what yields we're going to garner. All right, let's get to some individual movers now. For that, we'll go to Louise Moon.
Good morning. First up, we are looking at Alphabet, just slightly higher there in pre-market trading. Now, it's raising $5 billion over in Australia via a bond sale. This comes on top of a whole host of similar sales globally this year. So the latest one there from Alphabet, expecting pricing as soon as Tuesday. So we'll see how that plays through and if investors welcome that. So just pushing it slightly into the green there in pre-market trading. Now, next up, we're also looking at SpaceX. As you mentioned, that wider AI story that we're seeing, it's boosting SpaceX this morning. Now, not quite as much as other stocks in pre-market trading, but giving a little boost there, just over 1% higher into the green. And then finally, a quick look at Ferrari. They've sold their first ever fully electric vehicle, and that went for $40 million. Now it's pushing it slightly higher, mimicking trading in Milan, as it was also in the green there for trading. So a big sale there for Ferrari. There are a few concerns over how this would be welcomed, but it's seemingly doing well.
Little bit of a surprise there, I think, Louise. Thank you so much. That is Louise Moon. And coming up this hour, we're going to speak more about rates and, of course, the Treasury market more broadly with Gude of BNY Investments Newton. But first, tensions escalating as Israel says it has killed a senior Hezbollah commander along with 11 other people Sunday during strikes in Lebanon. Joining us now from Dubai is Bloomberg's Abir Abu Omar. Give us the details, Abir.
Morning, Vonnie. Yeah, the deadliest attack in southern Lebanon since that MOU was signed in June back in Switzerland. As you mentioned, a senior commander in Hezbollah, 11 people killed in the southern part of Lebanon. And this, of course, comes at a day where that MOU that we talked about back in June is at its deadline. So the 60 days have passed. Although we're taking this with a grain of salt, of course, Vonnie, especially with the Iranian Foreign Ministry just moments ago coming out and saying that that deadline, that MOU, is irrelevant because of all the violations that have been committed over the past couple of months or so. And of course, in the meantime, we're monitoring very closely what is happening between Oman and Iran. We're monitoring those negotiations that are taking place. The Ministry of Foreign Affairs, again, in Iran, saying that that is taking a while because of multiple reasons. Some of those security reasons, some of those because of obstructive behavior by third parties, namely the United States. Of course, that is what Iran is referring to. But we understand that those talks to reopen a path within the Strait of Hormuz, of course, are in the final stages. We've been reporting that they are indeed in the final stages, but then you're not seeing a lot of reaction on Brent crude prices or NY crude at this point, Vonnie, as investors really brace for a catalyst in this war. We're now at a place of these tensions in the Strait of Hormuz. We're in a place of these tensions in countries, even in the region. The latest we heard again moments ago is the Prime Minister of Kurdistan's office was targeted, he said, by Iranian drones. So you're seeing escalations. You're seeing the parameters of the war widening. Lebanon, namely one of those parameters. And then, of course, we're keeping an eye on the Yemen-based Houthis targeting ships in the Red Sea. And then perhaps what's really interesting in all of this is the Wall Street Journal reporting earlier this morning that Iran has used the relative lull over the past couple of months to rebuild or reestablish its military for potentially a broader conflict. I was taking a look at that story earlier in the morning, Vonnie, and it was suggesting, according to Arab and Iranian sources, that Iran could perhaps be preparing for a bigger war than what we've seen, also suggesting that the IRGC, the influence that the IRGC now has within the echelons of power is greater than what it was. And perhaps this gives a little bit of evidence to some of the stories that we reported over the last weekend about some members in the IRGC in Iran being promoted or reshuffled within the circle close to the new Supreme Leader, Mujtaba Khamenei. So something to keep an eye on. And of course, developments that we continue to keep an eye on, but nothing is clear at the moment on these wider negotiations or on the intricate negotiations within the wider negotiations, Vonnie.
Yes, so potentially a lot of developments, but the market waiting for something a little more concrete. Abir, thank you so much. Abir Abu Omar there in Dubai. Treasuries rising as the dollar weakens. The latest economic data easing the market's wager on the Fed's rate hike bet next month. Joining us now is Bloomberg's Morwenna Coniam. So we're pretty priced out for September. I guess there is a small chance that we'll get a rate hike in September, Morwenna, but we'd have to get some more data that would confirm the need for a hike, wouldn't we?
Yes, we would. At the moment, actually, we're not even seeing a rate hike fully priced in for the end of the year. That's gone out till January, so that is quite a shift from last week. I think really after last week's data showing, weakening employment, retail sales, and consumer confidence, there is a sort of bar there to be crossed, I think, for any further hike bets being added to. We will obviously have a bit more data coming up this week in terms of things like business confidence, which could be interesting. But that does seem to be the trajectory that we're seeing so far, and it is filtering through to other central banks like the Bank of England and ECB today as well.
And it's fascinating, Morwenna, because we did see that initial repricing in the yield curve, which was quite violent at the time, right? It just, moved higher, but also steeper. But we didn't quite get the unwind that the unwind in the Fed bets market would have you believe would happen.
No, we didn't. And when you talk about the steepening curve, I think it will be quite interesting to see what happens with longer dated debt. We have seen those yields rising. There is a 20-year Treasury sale this week, which I think will be quite a good test of that to see whether there is that appetite, whether those higher yields are still being demanded. But that's, I think, one thing that we'll certainly be watching as we get this sort of divergence, I suppose, between the shorter dated bets, which are very much on what's going to be happening in the near term with monetary policy, compared to actually where the investor demand is for the assets.
Now, we do a 20-year bond sale this week. We had a couple last week and they went off decently, not, massive extra demand, and quite high yields were paid. Nevertheless, there was appetite. What's the feeling in markets about this week's sale?
Well, yes, as I was just saying, I think it will be a test because we have seen those yields rising, and it does seem that investors are demanding more for investing in US debt. And I think that's something we'll be watching quite closely to see whether we continue to see that trajectory and whether that adds to the steepening of the yield curve.
All the while, gold is nearing $4,400 and stocks continue on their merry way higher. Morwenna, thank you so much. That is Bloomberg's Morwenna Conium. Rates uncertainties weighing on tech as companies continue to spend and borrow to accelerate their AI ambitions. Alphabet looking to raise more than $3 billion in what would be its debut bond offering in Australia. Joining us now is Bloomberg's Tassos Vosos. In a way, Alphabet would be crazy not to do this, right, Tassos? There seems to be global appetite for these corporate bond sales.
There is. I mean, we've known for a while that tech companies would overwhelm the world's largest credit market, which is the United States. This is why they've started reaching out to a number of markets across the world: Canadian dollars, euros, sterling, Swiss francs, you name it. If anything, one could ask, well, what took them so long to go to the Australian dollar market? Earlier this year and then late last year, we saw that Australian investors were really keen on getting some foreign name debt. We saw them buying additional tier one bonds from global investment banks. And so it was just a matter of time until that happened. Now, we've seen that this Australian dollar issue is not going to be as big as what we see in the United States, where you routinely get $25 billion. But before I came on air, I saw I loaded up the index, and Alphabet is going to be overnight one of the biggest names on the index just by one sale.
Wow, okay. Is there the danger, though, that the last one to the party ruins it for everybody? So if everybody tries to go out and raise in global markets, at some point a bond sale won't be received well, and then that will trickle back?
That is the fear that bankers have been having for weeks now. We've seen them change their tune. Whenever they reach out to the market, they try to tell investors that don't worry, this is the last deal for quite a while. Even though we all know that the AI ramp-up is going to take years, so we're only getting started when it comes to issuance. But what bankers are trying to do now is space it out a bit better. Otherwise, the market will become very overwhelmed. We have heard from 3 of the 6 hyperscalers that chances are they won't tap the US market again this year. But as we've seen, other markets across the world are fair game. We could see more of euros. People are expecting that. We're seeing now Australian dollars. Nobody knows what comes next, but it's going to be big regardless. Yeah,
it certainly is the new punch bowl, and I was going to ask you that very question. Do we know what countries are more favourable? Is it countries where markets have shot up?
Well, a number of analysts from investment banks are calling Europe to be the next epicenter. Whether that's going to be the case or not, what we have seen is that Europe can absorb a very large amount of debt from these firms, coming in multiple tranches, going as far as 100 years. So the demand is here. When they come is an issue they have to address, because as we've seen before, if they come too fast and too heavily, the markets can be spooked, as we saw last month.
Yeah, and as we know, Europe much more used to buying debt than some countries in the world. All right, credit reporter Tassos Vosos, thank you so much for all of that. Now to other top stories trending on the terminal this morning. German officials are said to be open to discussing selling the country's 12.7% stake in Commerzbank to UniCredit if the 2 firms can agree on a joint strategy. This, according to Bloomberg sources. The most important condition would be backing from Commerzbank's management for UniCredit's plans. The sources also say the position is not a formal German government policy position. Ferrari's first all-electric vehicle is now the most expensive new car ever sold at an auction. It's sold for $40 million. The Luce initially got a lot of criticism because of its break from Ferrari's combustion engine sports cars. Ferrari is now expected to sell out on the Luce's initial run of several hundred units. China's economy lost momentum in July, adding pressure on policymakers to support growth. Industrial production still rose 4.5% from a year earlier, though that missed estimates, and it slowed for the first time in 3 months. Retail sales growth also slowed. GDP growth likely decelerated to 4.1%. That's below the level needed for China to reach its annual growth target. Coming up, Jane Street posting its first monthly slump in a decade, a $15 billion slump. More from 13F filing season next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. Jane Street posting $15 billion in losses in July, in part due to its investment in hedge fund situational awareness. That's the first monthly drop for the firm in about a decade. For more, Bloomberg's Bella Farr joins us now. This is quite surprising. Jane Street never seems to lose money, so I guess there are flaws somewhere in its modeling.
Right. So, I mean, I'll put it in the words of one of its partners. One of its partners in an internal memo said, yes, July was a bad month. Jane Street, was rattled by situational awareness, but also general market volatility. The firm had a stake, had invested in situational awareness, but was also just hit across some of the tech kind of volatility that we saw in the month of July. But, like you said, it's their first loss in a very, very, long time, first down month in a decade. And, the firm has still reported net trading revenues so far this year that has beat last year. So we'll see what comes next. But obviously, they've said that they are adjusting risk appropriately.
Yeah, it's going to survive, let's put it that way. And we should preface this whole conversation by saying that some of these positions may already be exited. These are 13Fs from the second quarter, and they don't reflect derivatives and all sorts of other things that could be going on. I am curious, though, about all of these SpaceX buys, because there were a lot of them, not least an Australian, in fact, Australia's richest person, Gina Rinehart, who bought more SpaceX and also doubled her stake in Trump's media company. Can you tell us a little bit about this?
Yeah, so, I mean, we saw massive, we were waiting, obviously after SpaceX's record IPOs, we were waiting to see what sort of institutional, individual, retail investments we were going to start to see out of SpaceX, and Gina Rinehart was one of them. We also saw Nvidia, disclose a $21 billion stake in SpaceX. They had invested in XAI before the company went public and merged with SpaceX. But we also saw, some of the major hedge funds disclose significant holdings in SpaceX too.
Interested in Rockhouse Capital Management as well, boosting tech, and a lot of hedge funds did this. So its largest holding is the Qs, right? And it also boosted SanDisk, Microsoft, Amazon. It exited things like consumer staples and the equal weight S&P 500. Should that tell us something, Bella?
Yeah, there's definitely, look, I think as of the end of June 30th, like you said with the disclaimer, there was still a lot of interest in tech broadly, right? You had Berkshire Hathaway double down on their stake in Alphabet, which now is their third largest holding. They also bought more in Delta. But I think across the board, you're still, at least as of June, you were still seeing a pickup across some of the major tech companies.
Just really briefly, I want to point out that we also learned about Nvidia, that it has $21 billion in SpaceX and $30 billion in Intel, but also stakes in Coherent, Generate Biomedicines, Nebius, Nokia, and Synopsys, which was also interesting. But these are fascinating. You could go down this rabbit hole for hours. Bella, thank you so much for joining us. That is Bloomberg's Bella Farr. Coming up, a look at what's making headlines in your front page news. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn. Time now for your front page news. First up, the Wall Street Journal is reporting on the US probe of Guggenheim Partners CEO Mark Walter. The Journal says the probe is focused on 4 entities which serve as intermediaries between Walter-controlled insurance companies that made loans to Walter-controlled businesses. Prosecutors and the SEC are investigating whether Walter or his companies committed fraud by concealing financial connections while borrowing billions from those insurers. Next up, The Washington Post is reporting President Trump says the White House needs a military complex, as his administration has asked the Supreme Court to let them finish Trump's ballroom project. Trump deputies have contended it's inseparable from the underground military complex. Lower court judges have already ruled underground bunker construction can continue, but ballroom construction must stop. And finally, the Financial Times reporting private credit is under strain as troubled loans swell. The FT says the value of troubled loans has now reached 2017 levels, and some of the largest funds are taking write-downs. Coming up, more on the Federal Reserve as we head towards Jackson Hole and this bond market with Ella Gude of BNY Investments Newton. That's coming up next. This is Bloomberg. It's 5:30 a.m. in New York City, 10:30 a.m. in London. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Let's get you set up for the day. Pressure mounting in the Middle East. Israel attacks Lebanon as the US readies new economic measures against Iran. The dollar slips as data further bolsters easing Fed rate hike bets. Stock futures climb, though, on AI confidence. And that AI bond binge continues with Alphabet eyeing billions for its first Australian offering. Let's take a look at these markets then. As you can see, futures, particularly Nasdaq 100 futures, pointed higher after small declines Friday. We're up very much on the month, though. August very definitely making up for July, where we saw a more than 6% decline in July. We've made up almost all of that already in August. And remember, June didn't really do much for the Nasdaq 100 either, so this market determined to get its mojo back. S&P futures also pointed higher. Russell 2000 futures pointed just a little bit lower. Chance of the Fed hiking in September under 30%. Now it's practically gone, and as an earlier guest said, practically gone for the entire year. Let's move to yields because it's a little bit more obvious there. They're staying elevated, but not at levels that we were at last week. So 415.42 on the 2-year. If you go all the way out to the 30-year, 525.72. We haven't taken out that recent high yet. That would be 528. That was the July 31st intraday high. So that's maybe a line in the sand, but we're a good 3 basis points away from there, if that means anything. And then let's look at oil because that could set the tone today as well. We are moving higher now with Brent up 0.7% and back close to $90 a barrel. European gas futures also at 3-week highs at 62.20 per megawatt hour. We were learning that storage is really just a lot less full than it normally is at this time of year. Bloomberg Intelligence estimating that by the end of the winter, that could actually be at 20%. And then gold is trying to make the $4,400 mark. Joining us now is Ella Gude, Head of Fixed Income at BNY Investments Newton. So Ella, all of the data that we've got in the last couple of weeks, it's painted a little bit of a mixed picture about the US, but nothing maybe too concerning. Have you seen any fragilities that worry you?
I mean, obviously, with the valuation level, in certain asset classes is perhaps a bit of a concern for investors, but obviously that hasn't stopped performance this year, which has been another pretty stellar year. I think more specifically to bonds, perhaps one thing to mention is the deterioration on the fiscal side for the US because of the tariff unwinds that we've seen this year. You're starting to see a deterioration of that fiscal picture actually come through in the data. So for bond investors, that remains, one of the areas to focus on.
Yeah, Ben Emmons pointed out overnight that the debt clock is actually going to tick over tomorrow morning around the market open to something like $40 trillion. And, it's extraordinarily concerning. Is 525 and change enough to reflect that?
Well, I mean, we have cycles and structures in markets. I guess, cyclically speaking, the softer data and the better inflation numbers we've had recently should help a little bit to alleviate pressure on yields. Certainly on the shorter maturity, so the 2 to 5 year part of the curve that we're alluding to. Further out in the curve, those concerns will continue to persist. But I think for the next, if you like, couple of quarters, you actually have some support for bonds coming through. Certainly when you put it against the much more expensive valuations that you see in certain areas in equities or in credit as well.
Yeah, now, Ella, we're seeing the 2-10 spread at about 52, 53 basis points and the 530s at about 90 basis points. So we did see a little bit of steepening. Do you anticipate the curve will stay roughly this shape until we get more of a signal from the Fed as to what it's likely to do next?
I mean, our anticipation is that the Fed will stay put, particularly given the mix of the data that we've had more recently. And of course, markets gave us quite a bit of financial conditions tightening into September. So alleviation there should help things. And I think the Fed will have enough cover, at least temporarily, to do so. Having said that, as I was referring earlier, the structural tailwind for CapEx and the AI trade, I guess, remains in play, as does the sort of onshoring of supply chains. And so CapEx should stay in the pipeline for the foreseeable future. And so I think that will keep pressure on the long end, combined with this fiscal concerns that bond investors have as well. So all else equal, curves should stay steeper for the foreseeable future, yes.
Ella, will we hear anything at Jackson Hole this year? What are you anticipating we might hear from the Fed chair, or will he stay away from anything that might be controversial?
I mean, it's tricky because we have these working committees now at the Fed, this newly founded committees. So you will need to give them time to obviously come up with their studies. I would imagine a lot of chatter around the inflation mandate. But I suspect neutrality perhaps is the better expectation that might be coming forth. Certainly because, I think we think of the Fed in vacuum with regards to what's happening on the fiscal side. I don't think we should. Certainly, I don't think they think in vacuum. So, of course, they have an inflation mandate. They have a jobs mandate. But I do believe there's this third sort of silent mandate, which is, sort of a functioning bond market, certainly when it comes to the Treasury side. And so I think neutral perhaps is the best outcome that the Fed might, hope for Jackson Hole.
So we did see a couple of decent auctions last week that maybe went better than they might have gone. I'm sure there were a few jitters out there. There's going to be another one this week. We're also seeing plenty of appetite for, AI debt. Ella, at what point, if at all, do we see some kind of buyer's strike or just appetite wane?
I mean, that's predicting a needle in a haystack. I think I will try to stay away from that. But look, I mean, there's enough premium built in curves for the cyclical picture we were describing earlier. So, and, of course, playing bonds from a sort of underweight, certainly on the duration side, has been a good position to have this year. We're actually starting to close a lot of that underweight. In fact, we've reduced some of it. We're still not close enough to neutral, but I'd say there's enough premium in the curves built here. As to when the buyer's strike comes, it's a very, very difficult thing to predict. I think that's why you're getting the premium build up through the curves. Bond yields are moving in tandem, so it's across the world. It's not just in the US. And so there is this underlying current that we're referring to because of structural reasons. But cyclically speaking, I think there is a window here to own bonds over the next few quarters, and mostly because of all this AI chatter that we have in markets and this sort of jitters around that. So it is worth buying some protection in a multi-asset portfolio from the bond side.
I just want to clarify.
At least temporarily.
Yeah, absolutely. I want to clarify that when you say you're divesting some, what you mean is some of the AI theme and looking for maybe a little bit of relative underperformance of the US. Now, looking abroad, what looks attractive to you right now, given that we have a lot of central banks potentially starting to move?
Well, I mean, I think it's a little. I mean, the ECB has been early on the game this year because very, very sensitive to the inflation mandate. I mean, they only have one mandate, unlike the Fed that has two, as we were saying. And so in that sense, ECB has already moved. The pressures, structurally speaking, are slightly lower on the European side. So I would actually say from a central bank policy stance, Europe looks a bit more interesting now in terms of owning assets, whether that's on the equity side, credit, or actually core bonds themselves. So I would say that makes sense. And perhaps the euro will play more of that counter-cyclical role itself going forward that the dollar has played in the past. The dollar is much more tied now to the fate of equities in the US and the current account deficit. So actually, you could have this, optimal phase that probably began last year, early last year, continue and have some support for European assets, I would say, going forward. You can make the same case in certain pockets in Asia as well. We're seeing some of that come to life. Certainly we've seen it in the equity space, but there is an argument to be made there as well. EM is well owned now, so, it looks particularly the carry trade, but we continue to hold on to that because the structural tailwinds for a lot of those countries are supportive.
You mentioned that the yen balance is untenable here. So what happens next? Is the Bank of Japan forced to move? Why haven't they done so yet?
Well, timidity. If you've been dealing with 4 decades of deflation, it's a very, very scary proposition to shift into this new paradigm. I believe they will. Will they outpace market pricing? I don't think so. I don't think it's in their interest to do so. But certainly, as we were saying, untenable means, if you do not control the pace of the dollar yen, let's say, for example, move on the upside here, you're opening quite a bit of momentum that investors can go for. So I think the noise and the actions we've seen over the last 2 to 3 weeks tell you that is not going to be the case going forward. So it's not to say that we cannot have a few more attempts to the upside, but the asymmetry starts to look interesting for yen. So for yen stronger actually going forward. So it's worth taking a stab at that in smaller positions to begin with. But I would say more likely than not that we see yen trade stronger over the next 12 months.
Fascinating. We could be hitting a turning point then. Ella, thank you so much for all of your insights today. That's Ella Gude of BNY Investments Newton. Now to other top stories trending on the terminal this morning. Jane Global is hiring more people in Asia as it prepares for its tie-up with Millennium Management. Jane Global announced a deal to return external capital in its multi-strategy business and oversee money exclusively for Millennium. That deal is expected to be completed next month. Alphabet is looking to raise $3.6 billion in what would be its debut bond offering in Australia. Initial price guidance may be provided as soon as tomorrow. Spot Bitcoin ETFs saw their largest outflows since the end of June last week. The outflows signal a subdued mood in the Bitcoin market. The risk of higher interest rates and lack of legislative progress on a US crypto bill are pushing away buyers. Coming up, tensions rising in the Middle East as Washington prepares for fresh measures on Iran. More next. This is Bloomberg. This is Bloomberg Brief. I'm Bonnie Quinn in New York. The 60-day deadline on the US-Iran Memorandum of Understanding expiring today, while Tehran says the MOU has lost, quote, all relevance because of the violations from Washington. This coming as tensions flare up in the Middle East as Israel strikes Lebanon over the weekend. Joining us now is Bloomberg's Tyler Kendall in Washington. So what comes next, Tyler?
Bonnie, that's a really good question. At this point, we're going to have to wait and see whether or not the U.S. follows through on its pressure or its threat to ramp up the economic pressure on Iran, which our own analysts at Bloomberg Economics say could include a list of things, including so-called secondary tariffs on any importers of Iranian crude or, more broadly, countries that do business with Iran. It's going to be something to watch for here because at this point, we've gotten very little indication that the two sides are moving toward resuming negotiations, which, as you mentioned, were set to end today. Today marks that 60-day ceasefire window that, at this point, just serves irrelevant since the two sides haven't been able to move forward. Importantly, we should say that the strikes that we saw by Israel over the weekend, according to Israel, they were in response to an attack by Hezbollah, which does threaten to derail that U.S. brokered ceasefire. But, of course, plays into the broader region as well. Bonnie, I'm sure you saw the headlines, but when it comes to the Strait of Hormuz, we got some concerning comments from one Iranian top official that said that they are not going to let up their leverage amid this reporting that Iran and Oman have come together to release what is being called a shipping map that will help to guide transits through the Strait, but that doesn't necessarily mean that we're going to see a reopening anytime soon.
No, it doesn't. And Tyler, I do want to mention South Korea as well. A little bit of side-eye from Donald Trump to South Korea for not helping more on Iran. He says he's actually going to reduce US-South Korea drills, not the ones taking place this week, but further out. How serious of a diplomatic shift is this?
Well, we can say that we've actually seen President Trump take this action before. He did do this during his first term as well. And the president did cite what was his dismay with South Korea when it comes to the conflict in Iran. We know South Korea is one of those countries that has been part of those conversations about a maritime coalition to help secure the Strait of Hormuz, but like many other allies, has cited concerns with deploying assets until there's more stability in the region. But also importantly, we should say that President Trump gave some other context for why he has moved towards this reduction when it comes to joint military exercises. He said costs. He also said his relationship with the North Korean leader Kim Jong-un just the day before posting a picture seeming to tout their relationship together. But I wanted to point out that there is also reporting that the U.S. has been concerned and is trying to pressure South Korea when it comes to the timetable for some of their strategic investments in the U.S. that were part of trade deals made earlier this year. We'll have to see where it ultimately goes from here. The broader context, too, Vani, is that we saw North Korea last week launch a ballistic missile test, and that seemed to be in response to these planned drills, so that could have factored into some of the U.S.'s moves as well.
Yeah, absolutely, and not to be ignored, right, Tyler? Now, domestically, we've had lots of problem with foodborne illnesses, but now we also have a problem with beef because it's becoming too expensive for American households. This also will be a problem going into the midterms.
Yeah, no doubt. Considering that Americans, for the most part, had been weathering higher beef prices, according to the data, but we're starting to see that shift taking place at this time, at a time during the year when this is supposed to be the strongest. Bloomberg News citing some statistics, beef sale volumes in the 13 weeks ending in mid-July, which is a crucial stretch because that encompasses Memorial Day and July 4th, fell 0.3% from a year earlier. We know that the U.S. has already taken some steps to try to mitigate against this, including allowing more imports from other countries such as Argentina. Also keeping in mind that farmers are a crucial base of support for President Trump. Vani, I keep coming back to this new poll that came out a couple weeks ago from Fox News, which shows that Republicans are losing when it comes to voters' confidence in handling the economy for the first time since 2010. The economy handling inflation is typically an area that the GOP polls better on, but amid the conflict in Iran and higher prices, we know that the president is on defense. That's led the administration to say that they could be putting out some new economic proposals. We spoke last week on this program about the idea that maybe we could see some more tax cut proposals, though those wouldn't get done until a new Congress was in session, and that, of course, is going to depend on what happens with the midterms.
Yes, indeed it is. All right, Tyler, thank you so much. A vast array of subjects to cover out of Washington, D.C. That's Tyler Kendall. Oil rising amid rising tensions in the Middle East. Brent close to $90 again. This as producers continue to shuttle large volumes of crude out of the Persian Gulf, which is helping to keep a lid on prices at least. Joining us now is Bloomberg's Anthony De Paula. Anthony, how much is actually getting through by transponders going dark and the shuttling method? Is anybody keeping track of that? Does Iran even know if that's happening?
Hi, Vani. Yeah, these are all good questions that you're asking there, and that is kind of the conundrum of what oil market watchers are looking for. We do know that the barrels are coming out. Quantifying them is harder. The numbers that we're getting, though, from a variety of sources that we're putting together, ship tracking, what we're able to watch via the satellite signals from the Bloomberg, using some other satellite imagery, talking to sources, looking at what's going on in the market and analysts, we're getting numbers around 4 million barrels a day, 5 million barrels a day that are passing through Hormuz. Added to that are those pipeline flows that have been going on throughout the war. That's to the UAE, to the eastern coast, Saudi Arabia sending to its Red Sea coast. Those Red Sea shipments from Saudi Arabia are a little bit at risk now because of the Houthi threat there. So potentially the Saudis are looking to ramp up exports of their own from the Red Sea. They've loaded some ships last week that we reported. They've been one of the slower countries to try to get back into exporting out of the Gulf because they do have that Red Sea outlet. In comparison with countries like the UAE, which have been really active in sending many barrels out of the Gulf. And that's what's been, as you said, kind of maintaining prices before we get to really high levels. As you said, we're around $90 a barrel now. And so that's probably helping contain some of those prices before we get up to hundreds, where we might expect to see prices because of that disruption. We're still losing many barrels coming onto the market. The product prices are elevated because of fuels like gasoline, like diesel, like jet fuel. Those are really lacking in the market as refineries can't get that crude to refine for those products, which are key in this kind of summer demand period. So we're seeing the stresses there, but we are, again, seeing those barrels come out, and it's a real kind of detective game to see which vessels are going there, look at some ships that are empty in the Gulf and see when they pop up full outside of the Gulf, and try to match that picture together and see how it looks and see what the composite is for the market, Vani.
And there's something very psychologically different about $89 a barrel than there is about $100 a barrel for Brent, right, Anthony? Even though there's obviously only $11 between them. The refineries that were hit in the last few months, what is the progress on getting those back up and running? And, you know, are they on track?
Yeah, so it's been stop and start, sometimes kind of one step forward and two steps back, particularly in the case of a country like Bahrain, where they had resumed some production for domestic demand, and then were struck again in the latest round of Iranian attacks, which took place over the last month and a half or so. So that's been an impact. Countries like Saudi Arabia, for example, had that have their biggest refinery in the kingdom is at Ras Tanura, which is on the Persian Gulf coast. That was hit, not real damage. They did do some maintenance during the period, but again, we haven't seen those flows out of the Gulf. So, in part, the status of those refineries hasn't really mattered up until now because they haven't been able to export. Of course, the market's going to want to see that those facilities are able to produce and to export so that once Hormuz does open, they're able to hit the market. So Ras Tanura could be ready to come back. ADNOC has been shipping some products out. So we're seeing some positive signs from those two countries, some others having a little bit more difficulty, Vani.
Little by little. Anthony, thank you so much for all of the updates. That is Bloomberg's Anthony Di Paola. Coming up, we're going to get you set up for your trading week. This is Bloomberg. Now, let's take a look at what's ahead this week. First off, plenty of retail earnings. We'll get another look at the consumer with Home Depot kicking things off on Tuesday, followed by Target and Lowe's on Wednesday, and then the big kahuna Walmart on Thursday. The Fed's latest meeting minutes coming on Wednesday, and we also get $16 billion worth of 20-year Treasury notes going on auction also Wednesday. This is your macro picture going into Monday. Looks like it could be a higher day for the Nasdaq. Yields unchanged, Brent approaching 90. That's it for Bloomberg Brief.